If you are watching this video, then you're already sold on the idea of owning gold. Most portfolio managers will recommend anywhere from 5% to 20% of your portfolio to be in the precious metal. So I'm not going to waste any more time on why we should invest in gold. Once you have decided, the question then becomes, how do we invest in gold? Do we buy the physical gold that has a 5,000-year-old track record? Or do we go for one of the new gold ETFs? When it comes to investing in the precious metals, it seems to be a bit polarizing. One group of people will only ever invest in physical gold. They believe if you can't hold it, then you don't own it. And I myself was in this camp for many years. The other group of people are happy to invest in a gold ETF. So are they just risky people or uneducated, or do they know something that we didn't? So in this video, I'm going to bring together all of the pros and the cons of both sides, so then you can decide which one is going to be right for you. As always, if you do find anything in this video useful, be sure to drop a like. That would be much appreciated, as every like does help. Okay, sit back and relax, guys. Here is what you need to know about investing in physical gold versus a gold ETF. So here is what we've got coming up. We're first going to set the premise, build the argument for and against physical versus ETF. We'll then deep dive into the physical gold and look at the pros and cons of that, before moving on to the gold ETF and looking at the pros and cons to that. We'll then take a look at fees, as we do need to pull this out and take a look, as it's an important factor. And then we'll try to bring it all together in a summary so you can see which one's going to be right for you. First up, quick disclaimer.
This video is for education purposes only. You should seek investment advice from a registered professional before making any investment decision. This video is not responsible for any investment actions taken by its viewers.
So let's set the premise. So this was me, and I want to invest in some gold. So what are my options? I do have the physical option. So gold has a 5,000-year track record, so this looks good. Or we could go with one of the new ETFs. Is this a viable option? Are they safe? So this is what it looks like from a high level. Now, with the physical, you will have to pay a premium when you buy. So what's a premium? Essentially, bullion dealers need to make money. So let's say the gold price was $1,000. The bullion dealer will probably add about 5%. So they'll sell it to you for $1,050. So from day one, you're going to be 5% down. You can then either get it delivered or put it into storage. There's going to be a fee for it to be delivered. Or if you're going to keep it in storage, there's also going to be fees for that. Now, with the ETF, you won't pay a premium because you just pay whatever the fund price is today. It's also quick and easy. So you can just hop onto your computer, any broker or an investment app, and you can buy into a fund within a few minutes, and you're in the gold market. So the premise is this. From a high-level view, the ETF seems to be the better option. It's quicker, it's faster, you don't pay a premium. So it's for physical gold to prove that that is the better option. And that's what we'll be doing for the rest of this presentation. So let's deep dive into physical gold. For small investors, you're normally going to be investing in 1-ounce coins or maybe 1-ounce gold bars. And the pros to investing in physical are these. One of the biggest benefits that they say is that it's outside of the financial system. There's also no third-party risk or counterparty risk. You have the gold in your home and it doesn't involve anybody else. So how much weighting are you going to put on it not being in the financial system? Also, you get to experience and hold pure gold. And I speak from experience, there's nothing like having a pure gold coin in your hand. And you can also do it in a tax efficient way. So in the UK, if you buy the Golden Britannia, then you don't have to pay capital gains tax. So you can also buy physical in a tax efficient way. Now you have two options. You can either put it into storage or you can take home delivery. And these are the cons to each. So with storage, you are going to pay a premium when you buy, as discussed. There's going to be storage fees, so you need to know how much you're going to be paying a month for that. You're also going to pay a premium if you want to sell it, because the bullion dealer needs to make money off buying it off you. So they're going to give you a little bit under what the actual gold is worth. If you take it home, you pay the premium when you buy, as discussed. There may be a delivery fee you may look into. And you also have the additional issue of having gold in your house, so you may get stolen. There is also a bit more hassle with having gold in your house. When it comes to selling, what I had to do, my reputable dealer was an hour and a half away by car, so it's a bit more of a hassle when it comes to selling. And you also, as discussed, have to pay the premium when you sell. But in a nutshell, this is what the case for physical gold looks like. Onto the gold ETF. So as it's a fund, it's very easy and it's very fast. You can hop onto any broker, any investment app, find a gold ETF, and you're in the gold market within minutes. You don't pay a premium when you buy, you just pay the current fund price. And you don't have to worry about your gold being stolen. There's no premium when you sell either. And you can also do it in a tax efficient way. So you have the Roth IRAs, or in the UK we have an ISA, where you won't have to pay capital gains tax at the end. The biggest downside to having a gold ETF is the third party risk. You're putting your trust in a company that may default or go out of business. So this is the main con to gold ETFs. And you'll also have to pay a fund fee annually. So we'll have to look into that as well. But in a nutshell, this is what the pros and cons for a gold ETF look like. So let's dig into the fees. So a bullion dealer that I use is called Bullion Vault, and to store gold, they charge a 0.12%. They also have a minimum of $48. We'll compare it against the largest gold ETF in the world right now, which is the Spider Gold ETF, ticker GLD, and their annual fee is 0.4%. We'll take a look at what it looks like if we're investing $1,000 or $10,000 or $100,000 to give some perspective. So with the physical, remember you pay the premium, so this is going to be around $50. And your storage, it didn't meet the minimum requirement, so you will have to pay the $48 annually. Compare this with GLD and you'll only be paying $4 annually. So it's the ETF that works out more cost efficient. Okay, on to the $10,000. Your premium on this is going to be around $500 and your storage didn't meet the minimum, so it's going to be $48 annually for storage. Compared to this to the ETF, which works out at $40. So you can see on $10,000 investment, the ETF is more cost efficient. And finally, the $100,000, your premium on this really starts to add up now. $4,000. Storage is going to be $120. Compare this to GLD, where your annual fee is going to be $400. So this is more than the storage, however, you're saving a lot of money on the premium. So this says to me that a gold ETF is more efficient when it comes to fees. So let's bring all this together and summarize. Here we are in one snapshot. So when it comes to physical gold, it is going to be outside of the system, which is good. You don't have any third parties to worry about. You have the experience of holding and owning your own gold, and you can do it in a capital gains tax-free way. The downside is that you will be paying a premium when you buy. You have to maybe pay delivery costs or storage costs. If you take it home, you then have to manage the risk of theft, and you're going to pay a premium when you sell. And with the ETF, it's fast, it's easy, there's no premium, you don't have to worry about theft, and you can do it in a tax efficient way. The biggest downside is this third-party risk. You have to decide how big a risk is that, and then also it does come with a fund fee. Now for myself, if I was only going to spend $1,000, then I'd probably go down the physical. I'd just get half an ounce coin delivered, I can hold it, I can own it, and I don't mind paying the premium because I have the gold. If it came to $10,000, I may do a bit of both. I might get a couple of coins in physical and put the rest in an ETF. But when it comes to larger investments over 100,000 or the bigger investors over $1 million, then the ETF is looking like the better way to do it. So there you are, guys. Those were the pros and cons of investing in physical gold versus the gold ETF. As you can see, it's not a clear-cut choice. It does depend on your specific situation, how much value you put into it being outside of the financial system, and also the size of your investment. The main argument against ETFs is this counterparty or third-party risk. But think about it, it's no different to investing in a stock. You're investing in a company that could potentially go out of business. I was a bullion-only guy for quite a lot of years, but now that I've looked deeper into it, I am personally happy to invest in both. So I believe both can be a good option depending on your situation and also the size of your investment. So I hope this helps, and be sure to do your own research before buying. So just one favor to ask, if you did find anything in this video useful, be sure to drop a like. That would be much appreciated, as every like does help. If you haven't yet subscribed, be sure to click the subscribe button below and join us. I do have some great videos coming up that you don't want to miss. If you've still got questions or comments, then just post them below now. Okay, cheers guys, thanks for watching, and I'll see you in the next video. Bye for now.